In the past 2 years, it seemed as though property prices would never go down. They just kept soaring. It was one of the most massive price increases in market history. Imagine an asset whose value climbed by 1 or 2% suddenly rose by 20%. Anyone who took out a mortgage in 2020 made a wise choice. Your home's value increased dramatically, and you locked in a historically low mortgage rate. Mortgages are among the best ways to generate money. You will be paying rent anyhow, so why not pay the mortgage and build wealth? Even if you don't live there, renting it out can cover your mortgage payments and produce some revenue. But that has changed recently. The Fed's efforts to rein in inflation are causing a ripple effect in the housing market. No more 3% mortgages. 5% or 6% is the new standard. A percentage point, let alone 2 or 3, can make a tremendous difference in mortgage rates. The average US down payment is 6%. A $500,000 home with 3% taxes and fees would be roughly $2,979. The same residence at 6% would cost $3,824. The difference is striking, especially if you plan to rent it out and make money from it. But that's only part of the picture, because property prices are falling. Experts warned us that this cannot continue and that property prices will eventually drop. In the process of becoming a bubble, it was about to explode. Depending on who you ask, the news is either good or bad. Homeowners want to keep an eye on their home's value, but home buyers may finally consider purchasing a home because they won't have to gamble and overpay. So, will house prices plummet? Will the market crash by year's end? Is now the perfect moment to buy a house? We'll answer these and other questions later, but first, give this video a big like. Let's summarize what happened. After the March stock market meltdown, the Fed was anxious about the economy collapsing when the epidemic hit. The pandemic hindered supply chains, causing a lack of materials and a decline in housing availability. Low interest rates led to low mortgage rates, increasing demand. Adding to the supply shortage was the fear of selling their homes due to the uncertain future. What happens when there is too much demand but not enough supply? Prices skyrocket. It started out as a bubble, and it still is, but there is a limit to how far the prices can go up. Now for a new question. When do mortgage rates rise? This will reduce demand and force banks to consider smaller mortgages. Consider our first example. If the bank would have given you a $3,000 a month mortgage based on your earnings, you could have bought a $500,000 house at 3% interest. You can no longer afford $500,000 at 6% since you must earn $3,800 a month for a 6% mortgage, lowering demand and lowering costs. But things aren't always that simple. With global inflation, how might prices decline? The cost of building new homes will rise as a result of an increase in the cost of building materials. There will be no end to inflation. This would require the Fed at least 1 year to reduce it to 3 or 4%. If we look at the facts, however, we can see that the median house price has already dropped, which has a psychological impact. Afraid of having to overpay in the future, buyers hurry into the market when prices are rising. When prices fall, the opposite occurs. People wait till prices drop to achieve their bottom line. No one, though, appears to know exactly where the bottom line is. Reduced demand eventually leads to cheaper prices. In this case, the Fed is risking its own. At the same time, it's working to keep inflation under control while preventing a recession from occurring. It's a risky game with a high potential for failure. So, how far should the Fed raise interest rates to combat inflation? In order to reduce inflation, economists say that the Fed should hike rates by at least 2.5%. To put it another way, if the 0.25% hike in March was enough to send mortgage rates skyrocketing, Just imagine what a 2% increase would do. Mortgage rates haven't risen this fast since 1994. Rates were below 7% in late 1993. It took just 12 months for them to jump from 7.11% to 9.11%. Here, the Fed may be attempting to create a comparable situation. Anyone who comprehends how the Fed operates knows that it will not raise interest rates dramatically until there is a tragedy, such as the 2008 financial crisis, in which case the Fed was forced to hike rates in order to bring the economy back to normal. The wrong decision was made, and the rise in interest rates that followed caused a financial disaster. The crisis may have been avoided if the Fed had raised rates gradually, lowering property prices over time. Instead of slowing down the economic machine, the Fed would prefer to allow inflation to spiral out of control. Investors are therefore expecting inflation to continue for at least another 5 years, perhaps not as high as 8 or 9%, but possibly around 5 or 6%. There are numerous arguments to support this claim. Think about the consequences if China invaded Taiwan in full force. There are no words to describe the calamity that war will wreak on the world. With rising inflation expected, even if the Federal Reserve increases interest rates to 10%, it will make no effect in the short term. Let's pray that never happens. The big question is whether or not the stock market will collapse by the end of the year. Most likely, no. True, housing supply has returned to pre-pandemic levels and mortgages are increasing, but that isn't enough. Pre-pandemic supply was already low, so bringing it back up to par won't make much of a difference. Will prices go down? Most likely. As a matter of fact, this is already taking place, and it's possible that this will keep going till the end of the year. But when property prices rose by 20%, didn't it create a bubble? Considering that 1 out of every $5 in the economy was produced during the pandemic, you can't hope for prices to remain the same if you dump so much back into the market. When it comes to the printing press, this is merely another side effect. Each crisis is followed by a gold rush, where everything increases dramatically but eventually settles. Our gold rush has passed. So congratulations to whoever made a fortune. What about those who didn't? Oh well, there's always next time. In the meantime, don't forget to subscribe to our channel and give this video a thumbs up. We hope you enjoyed the video and we'll see you in the next one.